How should investors pick amongst the thousands of cryptocurrencies to invest in? And should you be concerned about the rise of regulations both domestically and abroad? We'll be discussing these themes with John Sarson. He is the CEO of Sarson Funds, a cryptocurrency asset management firm. Welcome to the show.
Hi there, David. Thank you for having me on.
John, it's your first time on Kitco. I want to talk about your funding, your strategy first. You have a multitude of products, starting from a large cap blockchain fund all the way down to a stablecoin index fund, a variety of products, very interesting. Before we get into them, I want to just get your overview, your sort of philosophy on investing, so to speak, and how it is that you pick individual securities, cryptocurrencies, whatever you like to call them, and assign them into a basket for a portfolio.
Thank you. Yeah. So I got into cryptocurrency because I'm a fanatic investor. I love investments. And around 2015, people started making money in an asset class called Bitcoin that I had not learned about. I was working traditional Wall Street jobs, distributing mutual funds and in New York City. And I thought I was in the flow on the investment world. But here was an investment that my colleagues and I didn't know anything about. And that evolved over the course of the past 6 years into a registered investment advisor focused on cryptocurrency, assisting high net worth individuals and other financial professionals get up to speed on this complicated asset class. When we think about cryptocurrencies, we have to remember that they're not companies, they're not stocks. They don't have to deliver iPhones, they don't have to deliver Teslas. They're protocols. They're a protocol for transferring cash from peer-to-peer. That was the first line of the Bitcoin white paper that started this all. These technologies are applications of blockchain technology or distributed ledger technology. And the first killer app for blockchain technology is Bitcoin, a peer-to-peer cash transfer protocol. The reason I mention this is because when we're talking about protocols, it tends to be a winner-take-all environment. There's nothing that stops Bitcoin from becoming the only way people transfer cash back and forth. And the ability of a protocol to scale is really very much infinite. Right. And to give you an example, like hypertext transfer protocol, that's how we navigate the internet now. We used to use file transfer protocol, but no one uses that really. We all just use hypertext transfer protocol. And if you could go back in time and buy the rights to hypertext transfer protocol, that would have been a great investment.
You probably get asked this question quite a lot, but what are some of your favorite altcoins? If I were to ask you for some coins that you think have the best investment potential over the next year or two, what do you think those would be?
Well, I mentioned one Intelcoin. I'll speak briefly about Dogecoin. Dogecoin is very polarizing. People think, how can there be so much value being stored and people making so much real money in Dogecoin when it was really kind of started as a joke. It really was started as a way to give people some cryptocurrencies that they could freely tip each other on the internet with, and that didn't have a whole lot of, accrued value, so people wouldn't want to spend their Bitcoin. And so that's where we are today. People don't want to spend their Bitcoin. And so when the Dallas Mavericks decided they're going to take cryptocurrency, they don't want to accept Bitcoin because people don't want to spend their Bitcoin. People are hodling their Bitcoin. But Dogecoin, which they do accept, people are happy to spend it. That's kind of like their pocket change that they can buy things on the internet with. It's a great transactional currency. And we look at, in addition to seeing who's best of breed in a particular vertical, we look at community and community engagement and community growth rates. And no community is more engaged or growing more quickly than Dogecoin. So we like Dogecoin and we have it in our portfolios.
When you say growing quickly, John, you don't mean it's getting to become a bubble now. That's what some investors are concerned about.
There's 150 million Bitcoin wallets approximately worldwide. Yeah. There's probably 2 billion people that would be organic users of Bitcoin because either they're unbanked or they live in under an oppressive regime where Bitcoin offers them the solution. So the community around cryptocurrencies is going to grow another 8 to 12 times in its size. And Dogecoin's community is going to have similar growth over that period. To your earlier comment that Bitcoin tends to drag the market around, what we're seeing really is adoption of digital money. And Bitcoin is the biggest digital money with the most on and off ramps in the most countries. And so that's where people start. But it's like a gateway drug. Once they get into Bitcoin, then they might get some Ethereum. Once they get into Ethereum, they can buy some ERC20 tokens in their browser, in their MetaMask wallet. And then they can buy some ETF or some NFTs. And they can put their NFTs alongside of their Dogecoin. And they can start to live more of a digital life. And this is a trend that no one's questioning, that we're leading more digital lives, but yet they're questioning why digital money is becoming so popular. It's kind of counterintuitive.
Back to your example, if I go to a Dunkin' Donuts, people behind me will be a little bit annoyed that I'm taking 10 minutes to process a transaction. Do you think there's going to be an emergence of protocols on top of Bitcoin that can be layered, like, for example, Lightning Network, for example, that can make the peer-to-peer transaction a little bit faster? Is that sort of the new trend right now, John?
There has been lots of attempts to do exactly that, and the Lightning node is the most well-known example of trying to make Bitcoin more useful. The reality is that Bitcoin's development community is very much committed to Bitcoin's core code. It caused a mutiny when they tried to take the block size from 2 megabytes to 10 megabytes so that more transactions could fit into a block. This is when Bitcoin Cash was forked from Bitcoin, because the development community couldn't agree on something so simple as that. The Lightning node is a solution, but it's not going to solve the unaffiliated payment, high-speed payment problems. Lightning node will be more of a solution for a corporate client that wants to accept Bitcoin and signs up for the Lightning node. So it's part of the answer, but there'll be other coins that fit in there better. Blockchain technology and paying for things is just one application. IOTA, which stands for Internet of Things, the company out of Japan, is launching their blockchain. They sell them in million IOTA at a time, and it's being used by self-driving cars to speak to the cars around them. And when you attach a token to your data, then it removes spam from your network, because every data emission costs money. It has to be sent on the blockchain. It also creates an immutable ledger. And as we get to the self-driving cars of the future, I don't want to put my family into a car going 100 miles an hour, 2 inches behind the car in front of it, just because the car in front of it says it's going 100 miles an hour. I want the network around that car to also agree with that their data is accurate, and that car is in fact going that direction at that speed. And I want it to be done in an immutable and unassailable way in blockchain technology, and tokens flying back and forth at a very high speed on the IOTA blockchain enable that.
Okay. What do you think, in your opinion, then, is the ideal cryptocurrency as a form of payment? You talked about Dogecoin. Is there something else that you like?
Yeah, I like USDC. USDC just crossed $25 billion in total assets. It's a project that is backed by Coinbase, Goldman Sachs, BlackRock, Fidelity. They are an on-ramp that will let people that don't want to invest in Bitcoin or any other cryptocurrency get all the benefits of cryptocurrency payment rails. This is actually better than traditional banking. USDC, which is basically the United States banking gold standard coin, for every USDC that's in circulation, there is a corresponding dollar in a bank vault at USDC's sponsor firm, which is a firm called Circle. And it's better than traditional money because it moves faster. And if it goes to the wrong place, you don't have to get it back. You can just turn it off. It's better, faster, cheaper, and it's winning the day, and it will continue to win the day. And that'll become our payment currency for things that we want to pay. Traditional fiat vendor will accept U.S. dollar coin because why would you not?
Finally, let's talk about regulation now, John. We know that the technology exists for cryptocurrencies to serve as a viable form of payment. Visa, PayPal, among other platforms, are already accepting Bitcoin here in the United States. But if you look abroad now, let's take a look at China, what China did over the last week. They've banned 90% of their mining capacity, basically, over the weekend. They've outlawed over-the-counter trading of Bitcoin and other cryptocurrencies. So they've really taken a harder stance on crackdowns. Do you think that kind of stance could be adopted here in the West? Do you think one day the government here in the US would say, hey PayPal, hey Visa, enough with your Bitcoin transaction platforms, shut it down?
God bless America, but I don't see that happening. We are the most innovative country in the world. And part of the reason why we're the most innovative country in the world, and that includes financial innovation, is because the regulators come with a philosophy of first do no harm. And that mentality is present at the Office of the Comptroller of the Currency, the OCC, that approved banks to custody and service digital assets late last year, sparking this big rally in the price of digital assets. It's present at the SEC under the leadership of Gary Gensler and Hester Peirce, Crypto Mom. There's a provision being floated around saying that maybe there should be a 2-year safe harbor provision where cryptocurrency companies don't have to worry about all of the SEC regulations that can be so onerous for the first 2 years, so that they don't stifle innovation. And it's kudos to these regulators for being worried about stifling innovation, because that's certainly what's happened in other countries where they've created kind of knee-jerk reaction laws outlawing cryptocurrencies or ICOs. I'm thinking about Korea in 2017. What happened was those firms moved to Japan, and Japan welcomed them, and Japan took a piece of Korea's financial sector. And that will happen to every country in the G20 that unilaterally decides that they don't want to allow cryptocurrency transactions on their shores. So I don't see that happening. I think that we are in a very positive and a constructive place when it comes to regulation in this country. And that's what I spend a lot of time analyzing and worrying about on behalf of my clients, because that's the big risk, that all of a sudden Bitcoin becomes illegal. And what we're hearing from the Fed is Bitcoin seems inefficient. We have better ways to do this. What we're not hearing from the Fed is the dollar is the only currency allowed in this country. We're going to go back to an era worldwide where there's lots of currencies, and different social groups have their own currency. And that was really more the way it was in this country 150 years ago, where each bank issued their own banknotes. Really the anomaly in the history of humanity has been so few store value instruments or transaction instruments. Bitcoin's clearly a store of value instrument for people. How well it works is debatable, but it's clearly being used for that. It's also a transactional medium for people. We mentioned it's not going to be the currency you buy a Dunkin' Donuts coffee with, but if you're going to buy a tanker full of oil 2 years from now, you're going to pay with Bitcoin. $30 million of Bitcoin for that tanker full of oil. It sure beats going to get dollars to send to the vendor in another country that they then have to turn the dollars back into their home currency. That's the past. Better, faster, cheaper is going to end on the back of Bitcoin.
So you don't agree with criticism that governments around the world, not just the United States, are more concerned about preserving their own fiat state-issued currencies and not having anything compete with that?
That's very much the case. I mean, that's why China. That's the reason behind China's movement. Clearly, they like to control capital flows. I mean, that's how they manipulate their currency. They need to keep their currency weak to create manufacturing jobs. And they have finally a way to let their domestic currency be manipulated and have a international trade currency, which they never really had before because of the capital controls. And it's all on the back of the DCEP, the Digital Currency Electronic Payments Project, which they're already pioneering in Sichuan province. And that's actually where they outlawed the Bitcoin mining as well. Bitcoin mining and Bitcoin is an affront to dictators, and it's an affront to communist economies. And Zimbabwe has also banned Bitcoin. So China and Zimbabwe are going to ban Bitcoin. And I don't want to be in the same side of the boat as those two countries on this particular issue.
Okay, so John, we've talked about regulation abroad, but what about regulation here in the United States? Do you think regulations will evolve to be a little more proactive in combating what investors believe is a rising threat in the use of cryptocurrencies for illicit financing and illegal activities? For example, the ransomware attack of the Colonial Pipeline not too long ago. What can the government do now to combat this threat?
Yeah, it's an important question. And a year ago, the government was a little bit behind the eight ball when it came to kind of staffing out their cryptocurrency divisions. But that's changed dramatically in the last 12 months. There's been a real emphasis placed on getting cryptocurrency talent on board at regulators. We all know that the IRS is now tracking crypto transactions. It's easy to track crypto transactions. It's harder to triangulate who owns cryptocurrency wallets, but not that hard. There's firms like Chainalysis that specialize in doing exactly that, analyzing blockchains and figuring out who owns wallets. And then the IRS software can run and you're going to get a tax bill. It's really important to not believe that you're going to get away without paying taxes on your cryptocurrency. That was 2018, not 2019 and not 2020. But the more specific question about financial crimes, financial crimes are investigated by a group called FinCEN, stands for Financial Crimes Enforcement Network. And they're the guys that will go after you if you launder money. And they just made a strategic hire. They hired an executive from Chainalysis to come and run their cryptocurrency division. So they now have one of the smartest people in the cryptocurrency ecosystem working at the Financial Crimes Enforcement Network. And I would warn any listener that what looks like a private dark web transaction to you is not a private transaction. And I would not be surprised to see certain privacy-centric blockchains, such as Monero, being deemed illegal in this country because there's only one reason to have them, and that is to conceal the identity of the funder.
That was my next question. There are privacy coins specifically for this reason, and you think they might be more heavily regulated. That's interesting. Look, I'm not claiming to be smarter than FinCEN. If I were to make, create a wallet using a fake profile, how could they trace it back to my real identity? I mean, obviously they figured this out. I'm just curious.
Yeah. So all of a sudden you've got 20 Bitcoin, and then you buy something with them, and it gets shipped to your house. Or you buy a Lamborghini, and they ask for your name, and all of this, and they triangulate purchases, and they can do it across an unlimited number of wallets. They're algorithms that find you, not humans.
Or I could use it to finance hackers to attack infrastructure.
Yeah, or you pay like something, you do anything that attaches to you with that money or a version of that money 7 iterations from now, and they got you. So it's not as private as you may think. And if you're using a blockchain like Monero that's designed to conceal your identity, that's what senators have a problem with, and that's what they talk about. They talk about money laundering, and they talk about financing terrorists. And at Sarson Funds, we don't invest in privacy tokens because we don't want to fund terrorists, but mostly because institutions aren't going to invest in them because they're going to be made illegal in this country. And there goes the investment thesis. So I understand that everyone's worried about government overreach, but don't do illegal things, and you won't have to be so worried.
Sure. So you don't think privacy tokens, just to sum up, are good investments exactly for that reason?
Yeah, they're not going to get the institutional money. Institutions are afraid of crypto, and they take a wide berth from anything that's controversial.
Yeah.
And they'll take a wide berth from privacy tokens. We've already seen it happening. They're underperforming the rest of the cryptocurrency market.
And again, real quick, the skeptics of Bitcoin, skeptics of Bitcoin will point to the exact same reason. They think that Bitcoin can be used for illicit activities, and so eventually the government will have to shut it down. You've already talked about this extensively throughout the interview, but just in 30 seconds, how would you shut down that argument?
It's an unstoppable payment method, but it's not a really great way to do illegal activities. The head of the DEA has said that she would love if drug dealers continued to use Bitcoin, because once you get one, you get the whole network. We saw the same thing happen last year with a child porn ring, where they were all using Bitcoin, and there's now immutable evidence against each one of them. Immutable. So like, it's not as private as we may have been led to believe, or at least software figured it. Technology cracked the privacy, and that's okay.
All right. So you've heard that, criminals. If you want to break the law, use cash or a privacy token that's probably going to be banned somewhere down the line. John, thank you very much for coming on the show today. Excellent thoughts. Thank you.
My pleasure, David. Take care.
Thank you for watching Kitco News. I'm David Lin. Where are we right now in the commodity cycle?